did you speak truth to power when you were there? And for instance, the Will Rogers quote that you gave at the end, did you use it in the corridors of power? And how did they respond? And I'm going to go on to ask a question about whether the real problem is actually the governance problem, but not in the way that it's being talked about.
Yeah, I mean, all of us are waiting to write our memoirs at some point where we will. I think, the fact is that many of these issues, we were raised and debated. For example, this whole twin balance sheet, we had this raging debate where, there were one or two of us arguing for a bad bank then, and there were lots of people who were against it. And the government, because of the kind of political sensitivities then associated with, because in a bad bank kind of approach, the executive and government have to take responsibility for all these haircuts, et cetera, and in this kind of suit boot sarkar kind of mahal, those things become more difficult. And that's why I think the judicial approach was chosen, the IBC, and I think I respect, I don't want to second guess, I think, but we had this raging debate on that, on the GDP also, we had raging debates inside. I wrote about this in my first economic survey. So I don't think that, at least when I was in government, at least with my boss, we used to have fairly heated discussions on almost everything. Yeah.
I can make a morbid joke and say that as survivor bias, but let me move on to the next sort of idea around this, which is you spoke about data. You spoke about a lot of structural tightening that has taken place, a lot to be done. But was this all done in a completely non-cogent, somewhat ad hoc sort of way, in such a manner that we actually got the tightening before we got any sense of the impact of the reform? So, for instance, IBC, for instance, all of the good actions taken by the RBI, there were some not so good actions taken by the RBI, but all the good actions taken by the RBI in not evergreening and so on. Is it that we tightened, perhaps from one, lack of cogency, and two, some sort of a socio-economic DNA rather than an economic DNA? Would you
see? I think both these questions, I think, have the common answer I have is that the notion that governance takes place in this ideal world of completely being coordinated, planned, all consequences foreseen and action taken, etc. I mean, that's a fantasy world. I mean, the world of governance is, you try and think through these things, you try a few things, you don't do a few things because there are political constraints. So I think the question that I asked myself is not, is that it's kind of like the Robert Rubin thing. Knowing what you knew then and knowing the constraints then, could we have done better? This, kind of Monday morning quarterbacking, is kind of interesting to do, but because, governance is a very messy business. So it's not going to be all coordinated. I thought, for example, the IBC, I think, you had a process where, there was a lot of evergreening for a long time. For whatever reasons, you should talk to others on that. Then we had, the AQR. Then there was a sense that the problem was, pretty acute. And then there was a debate on what to do, whether bad bank or IBC. And we got and now I think with the IBC, we're seeing that, it's working, but it's also not working, so we need to take action. So governance systems are about, difficult actions under constraints, and do we have mechanisms for, reappraisal, recalibration and so on.
Do we?
I think, see, the example I know better, so on the IBC, certainly there's been a lot of action to change the laws and so on. The question is whether they're working or not, that's another question. Similarly in the GST, which I'm more familiar with, I mean, obviously the initial design was not what we wanted, but I think there were, lots of, at least some corrective action taken along the course. Now, whether it's gone far enough and well enough, I think that we should debate.
So Arvind, I'm not going to let you go on this, and I'm going to call this Saturday evening quarterbacking, not Monday evening. For those of you who are not familiar with the reference, we're talking about the Sunday game here, so either before or after. And the question I have, and we have 4 years left on this administration, so I think it's definitely Saturday, if not Friday. So the question is it that lack of, it's not that there are two extremes, right? You're saying there's a completely practical sort of tweak it as you go along approach on one side, and a theoretical technocratic alternative. But those are not the two alternatives. There are many alternatives in the middle, which is you have a cogent framework and then you tweak as you go along, right? Is that absent?
I mean, we need a metric for assessing whether it's absent or not. I think the fact that I think things have turned the way they have, I think you could make the case that in some instances there wasn't a cogent framework. In some instances there were, and I think to the extent there wasn't, I think we are facing some consequences for that. And in some cases where things are working, maybe it worked out okay. So I think it is a kind of mixed bag really on this. And I'm not sure we can say, whether across the board there are no cogent frameworks or not. Certainly in some parts, I think there were cogent frameworks, and I think in some parts clearly there
So
weren't.
for instance, does this government know whether it wants to be statist or in favor of the private sector playing a greater role?
See, I think that, okay, so let me come to this whole cogent framework thing, right? And this is a thing that, it's a debate I had with Raghu as well, this lack of vision thing. I could make a case that, what I call the public provision of essential private goods and services using this JAM technology. And, you could talk about, toilets, bank accounts, et cetera, et cetera, et cetera. There was actually a fairly cogent framework around that, right? And this is a framework that the Prime Minister was very keen on because we wanted to deliver all these things. And there was a lot of actually, I could see at least post facto, there's a lot of kind of method and thing that, I'll tell you what kind of the vision in that could be. I'm just inferring this, but I think one can detect a vision, which is one that, say, you have a basic needs agenda, right? A social welfare planner has a basic needs agenda. And he says, what are all the basic needs? And then you roll out all the things that we say, but you say, what about health and education, right? Then, the framework says, or at least the thinking goes, health and education, very difficult to do, takes much longer, and it's because they're also done by state governments, maybe there's a kind of appropriation attenuation that happens. That is, that people who do it don't get the credit for what they're doing. Whereas when you supply essential private goods and services, whether it's toilets, cooking gas, bank accounts, there's a kind of attribution that happens, and there's some recent research which kind of validates that. So the framework says, I know health and education are important, I can't do it, but I can try and do all these other things which are also important, and I will pursue that vision. And that's why we have this kind of socialist, what I call this the new welfarist agenda. And I think there is a vision and a framework behind that. Now, so that's clear.
Welfarist agendas need incomes. Both national incomes and household incomes.
And this is where the debate I had with Raghu, that, so now the question, so now you're, when you start off on this, you think you have the resources and you embark upon it, right? Then if you realize, again, you don't have the resources, which you're absolutely right is happening now, the question is whether there can be a mid-course correction or not. So I think that's what we have to assess this, that there was a vision there, it is running up against resource constraints, absolutely. Because remember, some of it was actually being met by, by increasing the deficits and increasing spending, so on. So, resources were found somewhere or the other, but you can't do this indefinitely, and so you have to find new ways of doing it. So I think in that sense, but on the broader public-private, I think, balance, I think it's an open question. It's an open question whether, we know. See, The problem, and I'm not trying to at all make excuses for anyone, when I think about stigmatized capitalism, when I think private sector has a legitimacy problem, the public sector has both an execution and a legitimacy problem because of all the spate of things. The only way you gain that legitimacy is by delivering things and doing things. So ultimately, I think if the government can deliver growth and it can deliver its social agenda, it will. Otherwise, it won't gain legitimacy.
Yeah, so I'm actually not arguing in favor of one or the other. I was just saying, for instance, the latest budget presented after the new government came in power.
After I left.
After you left, much after you left. Basically switched back to private sector being the new messiah all over again. I mean, if you read that budget speech, I didn't count it, but I would almost bet that the word private sector appeared more than practically any other word there.
See, I think...
So, I mean, it's the lack of cogency that I'm speaking about, right? Which is, you switch between multiple ideas. Anyway, let me move on.
No, but there, I think, as a general rule, I think we should judge governments by what they do, not by what they, necessarily what they say, especially
revealed preference.
Yeah, yeah, exactly, what they do. And there's a lot to be to hold them accountable for.
Okay, on revealed preference, let's switch to data. And I think anybody who's any type of study or scholar, student in this mix will agree that the government has messed with data severely.
I mean, you're preaching to the choir.
So the entire room is the choir, right? But why isn't God listening?
No, I think that's a absolutely fair question, and that's why I think that we need to do this at many levels. It's not just just GDP and stuff. The fiscal accounts, and remember here. It's not even, in the case of the fiscal things, it's their own CAG who's been saying this as well, right? And, the outgoing secretary also has given views. So the question of why it's being done, I just wish it will be done. I can't give you a very good answer.
I can just add, since you mentioned that CAG has mentioned it in this regard, that as India goes from the Hindu rate of growth to the Hindutva rate of growth, our pantheon is shrunk to 2 gods.
Yeah, I think there are more learned people than me.
Yes, okay, I will leave it at that. Let's move on to the economy itself. If I were to sort of synopsize, and please tell me if I'm synopsizing correctly, your entire conversation, the difference between even severe crisis of the past and the one of today is that we have a different sort of balance sheet crisis. In 91, 92, we had a balance sheet crisis at the macroeconomic level. Today, we have it at the bank, NBFC, and other levels. I don't fully get the real estate discussion because prices are the best way to discover a crisis, and that hasn't happened yet. But we'll come to real estate in a second. Am I correct that you're characterizing this as a P&L crisis in the midst of a balance, sort of at the same time as a balance sheet crisis as represented by the financial sector?
No, I think there is a difference between macro and micro crises, not just balance sheet crises, in one very important respect. And that's why I think people are having difficulty understanding the current slowdown. When you have macro crises of conventional sorts, you have actually very large and disruptive movements in a number of prices, exchange rates, interest rates, defaults. So you have actually major disruptive things, discontinuities. That's what happens in a macro crisis. The problem here has been it's more like a slow bleed over a very long time. So you've not got any disruptive change. You've not got inflation going up. You haven't got exchange rates going down. You haven't got GSEC rates going up. What you've had is steady decline in long-run growth, which has affected balance sheets, and then a further bout now, which has really taken. So it's still not a macro crisis. No,
but I have to disagree with you there. Even in a micro crisis, assuming it's in a sector, whichever sector you take, when the market recognizes there is a crisis, even if it is the slow-boiling frog syndrome, when the market reacts, the only way it knows how to react is through prices. So if there is a real crisis in real estate in the way you're speaking about, a credit bubble, build-up of inventory, but no correction in prices, what does that mean?
See, I think that, look, the fact that the economy is as weak as it is, right, means that incomes and livelihoods are being affected, in a macro sense. It's a very, and it's a question, let me confess, I don't have an answer to, which I think is one of the big puzzles about the economy, is if all this is happening, how come stock market prices are doing so well? So, I mean, all these...
Okay, not well.
Compared to the, compared to these indicators, there's a huge disjunction, right?
Yes.
So, I don't want to, while I love markets and things, I won't always, infer back from the way the markets are behaving as to what's happening in the real economy. In this case, because there's just too much of a wedge. So I think the question is, we're having this kind of, real sector crisis, macro, growth is slow, which probably means, employment, consumption, wages. So it's affecting everyone, but probably not, it's affecting everyone a little bit. And that's why you don't get these huge disruptions. And that's why maybe markets also don't react. But it's no less severe because of that. And that's why we need all this action.
You mentioned, for instance, the spread between repos and the lending rate. It's just another way of saying the credit spreads have increased. Am I correct?
Yeah,
right?
Something like that, yeah.
So usually when credit spreads increase, it really means that there is risk aversion in the economy.
Correct.
But is it all the same syndrome? It's you talking about it, we listening about it, the newspapers writing about it. Is just a risk aversion that is permeating this, or is there a real crisis?
See, the risk aversion is a manifestation of something deeper. What is deeper is that...
But the question is it an excessive manifestation of something that's there, but the aversion is greater? But for instance, post-ILFS, there's no longer a liquidity crisis. There is a lending crisis, right?
Correct.
But there's no liquidity crisis.
That's because the RBI is pumping money quite a bit.
There's plenty of money in the system.
Yeah.
It's just not getting out to the people who need it. So that typically reflects not that liquidity. Whereas in 2008 in India, in November 2008, in the US in October of 2008, we had both a liquidity and a risk aversion. You had a massive crisis going into those months.
But we came out very quickly because we didn't have this, we didn't have compromised balance sheets for so long.
There you had
it. Yeah.
No, there you had it. That's why you had TARP and so on.
No, I'm talking about in India in 2008. Oh, you're talking about the US 2008?
Yeah.
Oh, fine. Yeah. But see, I think, look, here's, let me say why we're also having this slightly confused discussion. I take responsibility for it, is that this confusion and the spate of explanations reflects the fact that this is absolutely new territory for India. We have not had anything like this in the past because we've only had, what Harish Damodaran calls the 3 Fs, food, fisc, and foreign exchange were the problem. Somehow we sorted it out. This unrecognized slow bleed for a long time, which has completely compromised the financial system and is compromised large parts of the corporate sector in this kind of pervasive and long-run way, is something we've never had in India, and that's why we're having difficulty even, identifying the beast, let alone how to respond to it.
So my last 2 questions, please think up of yours in the meantime. So if the economy somewhat simplistically is defined as C plus I plus G plus net exports, what's the ism that says you can't lead with C?
4 things. One, one is that if you look at all the East Asian experience and all the episodes of high growth, not just in East Asia, but in India as well. I don't know whether you saw the charts. I think people haven't recognized that in the 90s and the 2000s, when we boomed, our investment boomed and our exports boomed and our trade boomed. And there, it was not consumption that led growth, because in no country in the world can you get sustained 7% growth based on consumption, because consumption requires income or at some level savings. So we've got the causation completely flipped in India, and endemically so. consumption doesn't drive growth in the long run. Exports and investment does. And that's why, if you want to boost people's consumption because you want them to boost consumption, go ahead and do that. The reason is very simple, is that to boost consumption, you only have your own market. And that's what the import substitution did. If you want the world market where there's no constraint on demand, that's why you export and you invest to export. And this is what is frustrating about India, that people think that you can get 7% growth on a sustained basis based on consumption. You just cannot.
But could you separate the problem? The 7-8% even is the long-term growth rate.
Yeah.
Going back to your metaphor of the ICU, why deny the economy the ventilator in ICU?
No, because there are other things you can do. Supposing you say,
But I didn't see there was no cyclical solution in your 5 hours.
Yeah, because I think
Because they're all further tightenings, actually.
No. So
They may work in the long run, but they may take you down to...
I mean, how much are we going to postpone the problem because of every time doing stimulus?
No, we did corporate reform, we did IBC, we did... So we have done a few.
But
GST hodgepodge as it is, we did.
But we need to do, clearly we need to do much more to get the financial system is jammed.
Yeah.
The financial system is jammed.
No question.
And if the financial system doesn't recover, you can do whatever palliative you want. It'll work for 2-3 quarters, but that's it. But finally, I would say that even if you wanted to do some, consumption type thing, then you have to step back and say, what is bang for buck and value for money on this? Personal income tax cuts ain't it?
So last question, I'm going to turn it over to the audience for the rest of the time. Why is IDBI not privatized? It's the easiest one to privatize. It's the easiest one to answer the critics who say there's no governance reform taking place in the banking system. When you were there, you couldn't help do it. They can't do it now. If we can't do those kind of things, it appears to be a political will problem rather than either technocracy or some...
Yeah, absolutely. I think when the big things don't get done, it's entirely a political will problem. There's no getting away from that. Absolutely.
On that note, questions from the audience, please. And we'll just move the mics around. I'm going to take right there at the back, just behind you. Wow. Okay. He who has the mic has this. All right. So this one, then 2 back there, and then over here, please.
Ravi, okay?
Ravi, are you okay? Stumbling like the economy, poor guy?
That's right.
Yeah, please.
Like the forecast or the economy itself?
Sir, thank you. Thank you for the lecture. My question is on the agricultural sector, wherein you mentioned that the production has not come down, whereas the prices have fallen. And you also talked about national agricultural market. In this scenario, I would like to submit that we don't have efficient spot markets, and it is not integrated.
Sir, could I have your statements end with a question mark in brief, please?
Yes, the question comes now.
Yeah.
How long it will take to integrate spot markets and to develop a very strong future markets in agricultural sector?
I have 2 quick questions. The first is, given the emphasis you had on real estate and agriculture, an underlying problem in all of those is the land administration that India has, and given 2/3 of all cases are linked to land, I didn't see that as a solution or something that you've thought about. Is that something that, in a crisis like this, we could operationalize? The second is slightly on a lighter note. A couple of years back, you were here for a lecture on literature and and economics, and I'd asked you a question on how much fiction you used as the chief economic advisor. How would you rate your successor in his use of fiction or the lack of it?
Okay, we're going to take one last question right next to you. Is that the gentleman there? Did you have a question? Yeah, we'll take one more and then we'll answer these 3 and then move to this side.
Sir, do you think the corporate tax, were you planning for the corporate tax reduction all these years? There was Make in India, there was all of that. Was that part of the framework or was it just a reaction? And because now that has been done, that's why the personal tax cannot be reduced? I mean, Have they locked themselves up?
Have they locked themselves out? Are mutually exclusive? Yeah, so
Yeah,
agriculture
okay.
first, yeah.
You know, the whole proposal to create a common market was actually very much part of the early effort that, you know, Niti Aayog undertook, you know, ENAM and things. I have not followed it very closely. I don't know what's happening now. But clearly, I think, you know, we haven't achieved what we set out to do. The government hasn't achieved. So
Just hold it a little closer.
Closer. It hasn't achieved what's going to do, what it needs to do, but so I think it's completely a work in progress. I don't know what the state is now. I've been away 18 months. But I think that, you know, that is one amongst a number of things that need to be done on agriculture. You know, take the fact that, you know, we have this, this is something that Vijay Kelkar and Ajay Shah also mentioned in their book, that we have kind of almost pro-cyclical trade policies. You know, when prices go up, we have export restrictions. When prices go down, we have import tariffs. And what that does is that actually it unsettles the farmer because he has no certainty, and therefore, you know, his long-run thing is going to be. So that's something that clearly needs to be addressed. See, the problem with I try to think about these things in much more long-term kind of political kind of frameworks, which is that why hasn't agricultural reform, which benefits millions and millions of farmers, why has it not been politically advantageous to do this? That's the question that keeps, you know, popping in my mind. You know, we thought, for example, late last, that, you know, the fact that agriculture wasn't doing so well did have an impact on some of the state elections, you know, in December of last year. And this has been happening through Indian history, that, you know, economic history, that agriculture doesn't do well. It affects a lot of people. And I think things, you know, it does have political ramifications. My only explanation for this, or part explanation, is that, you know, when the farmer is not doing well, it's probably not clear to assign blame to, you know, this central government or this state government. You know, if we could, you know, and this is the same problem, by the way, in health and education, that over 60 years, why haven't we had, except for now the recent Delhi experiment, why haven't we had political parties staking political capital on improving health and education? Because after all, if there's so many, you know, undernourished, undereducated children, it must be a political opportunity as well. And the same thing is with farmers. And yet that political dynamic hasn't worked out in India for reasons that I don't, you know, kind of the politics of this has kind of evaded me for the long run. And so, you know, we can, that's why I say we can keep saying what needs to be done, but, you know, unless the underlying politics comes out in the favor, in a way that it did for some other things, I don't know how that's going to happen.
So the second question was,
land.
Yeah, land there, and the question was also on, if data is fiction, do you really need fiction?
So on land, see, remember on land, one of the first things the government tried to do, was actually undo the earlier land reform. And of course, we know what happened. The history went bad there. My plea on land would actually be something a little bit different. See, if you think about it conceptually, in a country like India today, you know, we have this surge in land prices and land values. We don't have fiscal resources for all kinds of other services that the government has to provide. And here's this asset that's appreciating in value, and we're not able to fiscalize this land value. So we are foregoing a huge opportunity. So even forget about, you know, land reform, land whatever. If we can, you know, just have land taxes, and remember, these are done by urban bodies, not even, you know, state governments do a little bit, central government does virtually nothing at all. Why can't urban, you know, we did a piece on Bangalore, by the way, Bengaluru, in our economic survey. Bangalore collects about 5 to 10% of its potential property value, potential collection of taxes in this. So then I ask myself, one of the most sophisticated, electorates here, why doesn't Bangalore, penalize and reward politicians depending upon whether they're able to fiscalize land values and to deliver services or not? It hasn't happened. So I think that is something that we need to do much more at state and urban body level. On the corporate tax, before I come to the fiction question, on the corporate tax, we did have very early discussions on the corporate tax. And as I said, a few months ago, the political atmosphere wasn't right. But then, now when, the economy was doing somewhat, was floundering, I think the government felt it had to respond. And to some extent, that combination of the fact of having to respond because circumstances were adverse, plus the fact that the political constraints that prevailed early on about the whole Sood Bhoot Ka Sarkar changed, and that allowed, I think, the corporate tax to go through. See, the corporate tax is something that's desirable. What had to happen was in any case desirable in the long run because structurally our taxes were too high. And that's why I think the fact that the timing was what it was shouldn't take away from the fact that from a structural point of view, it was a desirable move. The income tax structurally, I don't think there's anyone would say there's any big compelling reason to change the income tax rate.
Sorry, the question was, are they mutually exclusive? Because you've done one and you have taken away 1,45,000 crores.
I mean, yeah, if you take, to the extent that fiscal resources are limited, it is going to play into that. There's no question about that. But then my question is that even if you think it's not a zero-sum game, you have to assess what are better ways of spending that money. On fiction, it's a cardinal rule of public life that you're only allowed to say things about your predecessors and successors when you praise them. And I don't know the fiction reading habits of my successor.
So I'll just add on the corporate tax that all India did was go from the fourth quartile of large countries to the first quartile of, or maybe median of large countries. So while it looks like a big move, and it was a big move in the context of India, it's not really a major move. And
no, but it's structurally in the right direction.
Absolutely. Yeah, and it's now probably adequate even. It's right moving from the bottom half to the top half. So I don't know where the mic is.
Yeah, this is my
Yeah, perfect. Yeah, go ahead, ma'am.
So 2 questions. One on the data part, which you said that the data is, I think, the most important. What would you say with regard to increasing the tax net on all of these fronts, right? Real estate, property tax, income tax, all of it. What can be done on the data and what is happening or what was being done while you were there? Number 2, I think the most worrying metric that has come out in this whole slowdown is rural consumption. Right? I mean, that seems to be shrinking, and that means much more of a severe impact on the rural consumer, even a small change there. So despite you mentioned the cogent framework that existed in the first government, the JAM and all of that, what happened to rural consumption? And what really happened there? And was it not demonetized? Was it something else?
I just asked one more question and then we'll...
Yeah, Dr. Subramanian, thank you very much. I was just wondering that when you were talking about the economy and its long-term prospects, the underlying assumption is that there'd be no disruption because of social tensions. As you know, in any economy, a social tension can actually be a huge reversal. 2 points that I would actually like your views on. One is that in your 2006 study that you did with Raghuram Rajan and Kalpana Kochar, you had identified the problem of 13 million people coming into the labor force in 2006, and that continues for the time. The other part is related to the agricultural sector, where in a generation, the average land holding will not be able to sustain a family. So you really do have a problem that in 25 years, you will have a huge rural to urban migration just because it won't be able to sustain. So the question which I want to pose to you is, in this framework, the way you look at it, if you looked at it a little longer term, are we still boxed into a real low growth scenario that can lead to a huge lot of disruption for social tension? Thank you.
I'm trying to transition out of my role as someone who worked for and spoke for the government to someone who doesn't, work for the government. So in terms of the data question, I think that, a certain awareness of, the problems with the data did exist when I was in government, and I think, especially on the GDP, which I focused on, there was an issue. See, and as I said about the GDP data initially, that initially it was purely a technical problem on the GDP data. There was no kind of real political whatever anything. So, and that somehow over time, maybe it changed. I think that we've had one of the world's best data systems, ever. Angus Deaton talks about how our, NSS surveys were the model for the world. I think we have to regain that, and I think, frankly, unless the government recognizes that that is, both important for restoring its credibility and trust, but also simply, to make good policy, we need the right data. So, for example, on consumption that you said, I had a piece today in the Business Standard where I have a slightly different view on consumption than the NSS does. I actually think, people shouldn't just think that I, criticize when the numbers are overstated. I do think that in this case, the numbers were understated, consumption, and I make a case for why that was the case. But I do think that...
This is the leaked NSS.
The leaked NSS report.
2017
yeah,
report,
the leaked.
okay.
I think that, of course, no question that the data must be released, but I do think that, and you can check out whether you buy that or not. But I think that in the case of rural agriculture, and this kind of links to that question, I mean, the truth is that somewhere along the way, I think in this kind of giddiness we had with manufacturing and then services, I think we forgot the kind of original lesson of the development structural transformation that, all successful development transformations happens in the context of high and rising agricultural productivity. You look at the East Asians, you look at China, and somewhere along the way we kind of have lost that.
US originally too.
Yeah, and by the way, on the land holding question, I think you have to be a little bit careful here, because if you look at the data, obviously advanced countries today have very high land holdings, but China's land holdings, by the way, are comparable to India's. So it's not just a land holding problem, or it may not even be a land holding problem. I think there are a bunch of things I laid out there in terms of what we can do about agriculture. New technologies, drip, how do we encourage drip? See, remember, the agricultural challenge, and this is where I think, what I call the late convergence stall, the headwind, is happening against the background of climate change. Climate change means less water, and therefore agricultural productivity is going to be stressed more. So I think that renewed urgency about boosting agricultural productivity in the context of shrinking resources is, I think, something that we need to come back to and put center stage in our development thinking. So. Yeah. Let me. So I just wrote a piece recently saying that Sri Lanka was going to be the next Argentina, in the sense that Argentina is kind of a metaphor for a basket macroeconomic case. Repeated inflation, repeated currency, collapses, repeated, overspending, repeated overborrowing and repudiating debt. And I said in this piece that Sri Lanka was showing all those ominous signs because, and this is actually some of my own research and research by lots of, especially Albert Hirschman and others, which shows that all these macroeconomic pathologies have their origins in social divisions and lack of social cohesion. So I think it's kind of almost like motherhood and apple pie to say that, if you don't have social peace, the task of running an economy is going to be infinitely more complicated. It's just, it's a truism that, but perhaps it's worth restating again and again. Because, it's not just you see, it happens in several ways, right? If you think about, macroeconomic pathologies is really about fights for sharing the cake. And you need a process of, politics, and democratic politics is really about, apart from whatever it does to politics, is a way of how do you share the burden sharing, whether when you're doing well or when you're doing badly. Burden sharing is absolutely critical, and that the legitimacy of that burden sharing depends upon social peace and social harmony. So if you lose that, all kinds of bad economic consequences follow.
We're going to take three
Yes.
more questions. One there.
Yeah, good evening, Dr. Subramanian. Thank you for a great talk. And I had two questions basically. One was, as I was listening to your talk, the overarching theme was I kept getting reminded of the famous paper by Doctors Kenneth Rogoff and Carmen Reinhardt, which basically talks about debt overhangs in economies create reduced growth.
Correct.
And my question to you is this what you were mentioning here, is it qualitatively different from what they had mentioned? Is that the case? And the second question is, we've been seeing a period of extraordinary, quantitative easing over the past 10 years or so in the case of USA, Japan, and the EU and European countries. There have been a lot of distortions or perceived distortions people have been talking about in terms of negative yielding bonds, low returns for savers of risk-free assets, as well as governments getting into market-making activities, And in the context of all of this, what I just wanted to ask was like, we're not in isolation here. So how is this affecting the Indian economy and all of this in terms of the linkages, Yeah.
Second question, last question here.
Dr. Arvind Subramanian, you talked about the criticality of power sector reforms. Now, Delhi government, don't you think they have done a commendable job of reforms in the distribution? So much so, Arvind Kejriwal is hoping to come back to power through what he has done largely on the power sector. I mean, you also mentioned about education and health. But power sector today, from the losses in the range of about 52%, it is less than about 8%, and the reliability is over 100%, is in the range of about 100%. Isn't that, and why is it not being replicated by other governments? I am just unable to figure out. Thank you.
Yeah.
Last question here.
Good evening, sir. Considering the overarching philosophy that India is a consumption-led economy, but
So again, this is where I want to, my co-author said, Arvind, don't go there. You're never going to win this battle because everyone thinks India is a consumption-led economy. So can I just say one thing on that? I've been thinking about why do we think we're a consumption-led economy, right? And let me try one last attempt.
Because there's only government consumption, no government investment.
No. Let me try one last attempt at trying to convince you that, I think that because we did services and not manufacturing, people equate export and trade with manufacturing. And since we didn't do manufacturing, we therefore think we're not export-led and therefore consumption-led. As Nandan and others will testify here, even though we did services, it was an export-led services model. So, analytically, we had an export-led model. It's just that sectorally, it was not so much manufacturing, it was services. So that's why we keep, otherwise I can't explain why. And let me give you one last factoid, which I think everyone should really internalize. India trades more than any country of its size. So we're not a consumption-led economy. Does it? Sorry, I preempted your answer.
No, my question was basically considering that there is a need to change that philosophy in our mind that it is in fact a export-led economy and investment-led economy. Is there a need for policy intervention in terms of truly exemplifying that, saying, for example, a dirty float rate of Japan model?
Should we make it an export investment economy?
Yeah,
exactly.
like a Japan model.
What policy would we?
See, okay. Okay, is it one more?
Yeah, there were a couple more questions before that. So one was about the international context of quantitative.
Let me finish. Yeah. So on that, yes, Rogoff, Reinhardt is very much it's just that, I feel that India, because it has never had balance sheet crises of the sort Reinhardt and Rogoff mentioned, is why we're having difficulty understanding the current predicament. But yes, it's exactly a play out of Reinhardt, Rogoff. I think I thought you were going to ask the question of, see, the two potential questions that you asked. One, they're doing QE2, what's the impact on us? Or they're doing QE2, should we also do QE2? Because now people are speaking about that as well. And on the latter, I think the answer is comprehensively no. There's no need to get into all this, we're already injecting liquidity. And I think on the other side, I think we know what the consequences have been. They've had low interest rates, it's pushed capital to developing countries, but then, the capital comes in and goes out, it creates a lot of volatility, and so we need to do, measures to kind of address that volatility. On the power sector, you actually, threw me off because, if you look at the power sector data, at least the latest data I've looked at, if you saw the electricity generation chart, if you look at plant load factors, they're actually declining very rapidly. And I thought all the latest, which I haven't looked into and so I won't say too much, but the whole Uday scheme and the discoms are now back to being in, their losses have increased, the sense that the ATC gains over and above what they did just because their debt cost was lower, that doesn't seem to have materialized in any significant way. So it's news to me that power sector is a success, given that I came with the prior...
Only in Delhi.
Only in Delhi. I don't know Delhi well enough. I don't know Delhi well enough, whether it's true or not.
I think he was asking, in Delhi it's been a success, why not replicate?
I don't even know that I didn't realize it was true in Delhi as well. I'm not sure. I don't know whether it was true in Delhi or not. Yeah?
Okay, I'm going to appropriately leave the last question to the center of the room, not to the right or the left.
Yeah. Mr. Subramanian, great talk, but I'd like to ask one very basic question. When you say there's a free fall in the economy, which it is, the free fall is in what? In the demand for all the goods which are being produced, whether it's automobiles, whether it is real estate, whether it's FMCG product, biscuits, etc. So obviously the companies are under great stress because their top lines are in a mess, holy mess. And that affects everything which is happening. So when you say that the demand is not the driving force, yeah, I do believe that in India, exports are a minuscule part, even though IT has given it a big fillip, yeah. Otherwise, as a percentage of GDP, it's small. It's really more the consumption, and all the industries are in a mess. They're feeling the pain. They're feeling the pain very, very badly.
So, I generally get pretty good teacher evaluations, but here I think I should get an F on all my teacher evaluations here.
Or a C, at least.
Or
C for consumer, yeah.
C. Firstly, I think that, it's not the case. Exports to GDP in India is not low. It's about, it's about 25%, 20 to 25%, which is quite high.
And trade is 40.
And India's trade to GDP is greater than China's. It's greater than US. It's greater than Japan. It's greater than Brazil. All Indonesia, all the big countries, much traders. So that is, I think, the notion that we don't trade is just not right. And so the question, therefore, is a good one. And that's, I think, maybe what we need to, the mindset, maybe the one thing that comes out of this talk is that how do we get people to refocus on exports and investment? I think, and to me, it is self-evidently clear that unless you unbreak the logjam in the financial system and clear the debts of the companies, you will not break that investment cycle or the export cycle. The problem with exports is that you also need world demand to cooperate, and at this stage it's not cooperating. So that's why I say that we have to have some moderation in terms of what we can expect from our economy. I mean, the birthright of 8 to 10% that we achieved during the boom, I think it's another mindset that we have to, I think, really get out of, because it is not an entitlement.